Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Tuesday, April 5th. Stocks are slipping in the early going as traders seem to be taking a breather from the recent rally. Another interest rate hike by China may weigh on global sentiment as well. The quarter percentage point increase in lending and deposit rates is designed to bring the country's inflation under control, but it could rekindle concerns about a slowdown in the world's second largest economy. However, U.S. investors may be more focused on the minutes of the latest Federal Reserve policy meeting, due out this afternoon. Ahead of that release, Fed Chairman Ben Bernanke said the recent rise in commodity prices is being driven by global supply and demand and doesn't threaten a major spike in inflation. Right now, crude oil is slipping a bit from the 2.5-year high it hit yesterday, but it's still trading around $108 a barrel, and gold is holding steady near $1,440 an ounce.
The technology industry is in focus for a couple reasons today. NASDAQ OMX Group said it will rebalance the NASDAQ 100, effective May 2nd. According to the Wall Street Journal, the move was driven partly by the rise in Apple shares, which have more than quadrupled in 2 years. The stock's weighting in the index is currently more than 20%. News of the rebalancing is sending Apple shares down more than 1%. Meanwhile, a big deal in the semiconductor sector is boosting speculation about further consolidation among chip makers. Texas Instruments is buying National Semiconductor for $6.5 billion in cash. The price tag represents a 78% premium over National Semi's closing price on Monday, and that stock is jumping more than 70% this morning. That's pulling up several other mid-sized chip makers. Analog Devices, Linear Technology, Broadcom, and Marvell Technology are all solidly higher. But Texas Instruments is losing ground on news of the deal.
One stock heading sharply lower today is KB Home, down nearly 8% right now. It reported a larger than expected loss in the first quarter as revenue fell 25%. KB Home also said Bank of America approached it about restructuring the company's mortgage loan relationship. Moving in the other direction is Expedia. It's gaining more than 4% after the online travel booker agreed to resume doing business with American Airlines. Expedia had pulled the carrier's airfare and schedule information off its website in January as part of a dispute over commission fees and product control. And shares of Cubist Pharmaceuticals are jumping more than 15%. The company granted Teva a license to sell a generic version of its Cubicin antibiotic in the U.S. Analysts at Wedbush and Robert W. Baird upgraded Cubist on the news.
Finally, let's turn to Europe, where sovereign debt issues are back in focus. Moody's Investors Service downgraded Portuguese government bonds by another notch after a 2-notch cut last month. Moody's cited fears that Portugal will have trouble meeting its deficit reduction goals and will be forced to seek a bailout from the European Union and International Monetary Fund. Portugal's Prime Minister resigned after Parliament voted down a 4th round of austerity measures, and the cost of insuring Portuguese government debt against default is now higher than Ireland's for the first time since August. That's the latest from Weiss Research. Have a great trading day.